Hello, and you're welcome to a special weekend edition of Global Business Insights, where we look at headlines from a deeper business perspective. Hunter Biden pleads guilty to a 9-count indictment that included 6 misdemeanor charges, including failure to pay taxes, a felony tax evasion charge, and 2 felony charges of filing false returns. Another judge delays Trump's New York sentencing to November 26 after the elections. Today we got the usual buzz around implications of the US non-farm payrolls report. Many expected a rush to price in a 50 basis points cut from the Fed following any significantly worse than expected data. I doubted if one more dismal data read can drive FOMC into 50 basis points, nor will higher than expected wage growth or strong upside surprise on jobs added stop the 25 basis points that has been so extensively telegraphed. Still, the data came in with non-farm payrolls, that's NFP in the US, up by 142,000 in August after a downwardly revised 89,000 increase that was revised from 114,000 recorded in July, and short of the market expectation of 160,000. If you factor in the revision, the data is short of expectation by 43,000 jobs. Unemployment rate inched down, however, to 4.2%, with the labor force participation unchanged at 62.7%. Finally, wage inflation, measured by change in average hourly earnings, was higher at 3.8% from 3.6% in July. The data, however, is not expected to change the FOMC's position when they meet this month. Still in the US, the S&P 500 and the Dow both finished in the red. That was yesterday. Technology stocks boosted the Nasdaq as markets digested August's private payrolls, which came well below estimates, while weekly jobless claims declined. Eurozone economic growth eased in the second quarter, showing GDP growth was 0.2% in the 3-month period to June, lower than the 0.3% initially forecasted and seen in the first quarter, in part due to subdued levels of personal consumption. Germany industrial production figures also showed output falling by 2.4% in July from the previous month, putting pressure on the ECB, European Central Bank, to continue its easing to help growth when they meet next week. Oil prices were close to a 14-month low yesterday as bearish forces driven by demand in the US and China, plus a likely rise in supplies out of Libya, offset a significant bullish withdrawal from the US inventories and an announced 2-month delay to output increases by OPEC plus producers. The Nigeria Central Bank released August 2024 composite PMI, which stood at 50.2 index points, indicating expansion in economic activities for the first time in 13 consecutive months of contraction. The report shows that the services sector recorded expansion for the third consecutive month, while the agricultural sector registered expansion for the first month. The industry sector, though contracted, registered a slower contraction when compared to the level recorded in the previous month. Nigeria has a fan, and that is billionaire Bill Gates. Earlier in the week, Bill Gates announced a $2.8 billion investment aimed at enhancing the country's healthcare, nutrition, and agricultural sectors. Gates discussed efforts to improve the primary healthcare systems, including the need for a realistic, well-funded plan and the importance of using data to measure progress. Healthcare was also a focus of his remarks to the nation's governors and cabinet ministers at the National Economic Council, where he emphasized the opportunity to improve efforts to stop polio outbreaks in Nigeria. Both Trump and Harris, as they prepare for a crucial debate next week Tuesday, have released more on plans to reduce inflation and improve well-being of Americans. Former President Donald Trump yesterday presented his economic message in a speech in New York. we look closer at the very divergent positions of the candidates. Saudi Aramco, Abu Dhabi National Oil Company, Trafigura, South Africa's Central Energy Fund, and Oman's OQ Trading are reported to be in competition to buy Shell PLC's service stations in South Africa. Shell is looking to raise nearly $1 billion from the sale of its downstream unit in South Africa, which includes trading and a network of 600 service stations across the country. US stocks futures inched up, but stocks still opened flat after the data on jobs came out, perhaps suggestive of a more dovish Fed, but not the 50 basis points some were pricing in. The FOMC will increasingly be paying more attention to labor markets, which look like they are weakening, and the economy, as inflation looks in much better shape. Still, the jobs report is better than what we got in July. Lower unemployment and no compelling evidence of a slowdown has to be good news. But the downward revisions alert that this number could also be revised downwards. There is no exogenous shock that could lead to a hard landing. John Williams, President, New York Fed and Vice President of the FOMC, said after the release that it's now appropriate to lower the Fed funds rate. No clues on whether it's 25 or 50. No sense of urgency, in my view, to risk a 50 basis points cut. Let's just conclude by saying this is as close to Goldilocks data as one could get, in the sense that it points to no imminent recession, plus higher chances of an interest rate cut later this month. Brent crude this morning was $72 a barrel, more than a year low, and still trending after OPEC delayed action, returning more oil to the market, and a latest report also showing less demand in the medium term. The OPEC Plus countries, which previously announced additional voluntary cuts in April and November 2023, including Saudi Arabia, Russia, Iraq, UAE, Kuwait, Kazakhstan, Algeria, and Oman, held a virtual meeting on the 5th of September, that's yesterday, stressing resolve to ensure full compliance with the voluntary production adjustments. Countries are committed to adjust compensation plans for any overproduced volumes in August. Also, 8 participating countries agreed to extend their additional voluntary production cuts of 2.2 million barrels per day for 2 months until the end of November 2024, after which these cuts will be gradually phased out on a monthly basis starting December 1st, 2024. There is still the flexibility to pause or reverse the adjustments as necessary. But all this was not enough to arrest the decline in prices, despite brewing tensions in the oil-rich Middle East region. It should be plain to see that there's just too much oil compared to demand, and the tepid, increasingly resource-efficient global economy needs less and less energy to produce the same output. The world's biggest importer, China, is also slowing down. The US EIA, that's Energy Information Administration, had reported an estimated inventory decline of 6.9 million barrels for the week to August 30. That was yesterday, which inched prices higher for a while, but not enough to offset earlier losses. Analysts noted that OPEC Plus's decision to delay the rollback of the cuts would tighten inventories by between 100,000 barrels per day and 200,000 in the final quarter of the year. But with many members cheating on quotas and almost all facing fiscal pressures, one has to expect supply is unlikely to see a significant drop. EVI maintains its projections of crude averaging in the range $75 to $80 per barrel for the Brent standard in 2024. The approaches are miles apart, but both Trump and Harris say they have the answers to inflation and the economy. Trump is proposing to bring corporate tax rate down from 21% to 15%. He wants to crash energy costs to under $2 per gallon. That's for gasoline, to bring transport and energy costs down. He spoke of an efficiency commission or task force to be led by Musk to cut waste. He wants to terminate the Green New Deal, have more tariffs for all imported cars, not just from China, China, and also promising more judicious use of sanctions. He expects the cost associated with lower taxes will be more than compensated for by broader economic growth. Trump also wants to create a sovereign wealth fund to invest in the country. Kamala Harris, however, will fight corporate price gouging to bring down inflation. She's offering generous incentives, including low-interest loans and expanded tax credits for small businesses, also cutting red tape to help accelerate small business starts. This will be financed by higher taxes for the wealthy, capital gains, and corporate taxes. She sees the fast growth in small businesses reducing inequality and spurring the emergence of the fairer opportunity economy, focusing on the middle class that she promises. Both offerings are rich in harmless rhetoric if you do not look to politicians for economic analysis. There is an increase in price gouging, no doubt, but the U.S. Fed Chair Jerome Powell, that's the authority on U.S. inflation, in his latest speech at Jackson Hole, did not mention price gouging once as a contributing factor for inflation, which they see, that's the Fed, as trending down, but will not reach their targets till next year. However, Trump's promise to ramp up oil drilling requires investment, not as forthcoming, especially when oil prices are falling. Low oil prices will also hurt U.S. shale, and OPEC Plus wants decent prices to maintain and improve investment. Trump seems to think he succeeds in reducing prices by 50%, as he says. The investment taps, especially for the more expensive shale plays, will remain open. Rather optimistic. At best, plans to rapidly expand U.S. production and crash prices will be found to be easier said than achieved in the short term. Admittedly, higher tariffs on China in the Trump era did not lead to inflation, and protectionism may work in larger markets like the U.S. But a tariff war can hurt the U.S. as other countries counter with tariffs. Higher costs of trade will also be a drag on global economic growth, which of course will hurt the smaller, more vulnerable European economies than, say, China with its vast domestic markets. Lower taxes can attract business as competitiveness is enhanced. As for the financial and performance audit of the government by the efficiency task force, let's see, there are consultants who can do this. The task force will more likely steer the process. It depends on what comes out of it and how it's done. It's hard to say anything about that for now, but it can't be a bad idea to sharpen prudence. The other deep dive is on ethics, as Africa's biggest wireless service provider by subscribers announced it is probing issues of alleged favoritism by Chief Executive Officer Ralph Mupita. The Johannesburg-based Sunday Times newspaper recently reported that an unspecified number of executives threatened to quit after complaining about Mupita allegedly giving preferential treatment to a female executive. We also understand that the MTN's board is engaged in a verification process in relation to the allegations, and we'll get feedback once this is over. Few companies have systems that can proactively and effectively check excess at the executive level. Most boards have a subcommittee that will typically address issues like this, but it all depends on how really independent the non-executive directors are. The smoke can be worse than the fire, especially if it won't fade away. Companies with weak performance management systems will also lack the evidence to quickly snuff out rumors that are, of course, very ugly. Where there is poor documentation of performance expectations, metrics, and where the processes are not rigorous and free from individual manipulation, of course, there could be issues. Like I said, the standard way to protect your company from this type of situation is embedding comprehensive, rigorous performance management policies, systems, and instruments, plus adequately independent board members. Often using external consultants to manage board-level performance reviews. Use of tools like 360-degree assessments may also expose less obvious cracks. Asian, European, and US stocks have seen better days. Almost all the major global indexes on the back foot, ending the week lower. All three US indexes are on track for the worst week since April. Oil markets bearish. Well, that's it from me on Global Business Insights. Enjoy your weekend. Bye-bye.